Okay, we are live. The Prospero.Ai stock market live streams on YouTube and Twitter. I already see people in the comments. Joseph, great to be back. Good to see you in here. We'll give a minute for everybody rolling on into the stream. A lot of good stories to talk about today. I know there's a lot that we covered in the newsletter that goes out on Sunday nights. And Matt, I believe you have some topics you want to cover from that with George. So I'll let you kind of talk about those, and then we'll go on from there.
Yeah, so the Sunday night newsletter that we sent out, we titled it Bears Roar and Kathy Buys. And talking about Kathy Woods, George sent me an article on Saturday when we were talking about the newsletter that he was quoted in. George, you're all over the place, man, in all kinds of articles and speaking all over the world. George is a big deal. But anyway, in the article, it's talking about how Kathy Woods bought the dip last week. And it was interesting. A lot of people commenting in the article were just saying, man, that's a bad idea. We're extremely bearish. Things are falling apart. But George wasn't quite that negative. And so in the newsletter this week, we talked about why George was only slightly bearish. And so far today, it looks like he's been right. We're seeing a little bit of uptick in the QQQ, and things are looking up.
Yes, so that is a lot of good content there. Some of the topics that I have, we also have another story to spin off the Kathy Wood, who's been predicting deflation for some time now because of the innovation in tech that we're seeing. So we'll cover that again and see if we're going to go into a period of deflation, stagflation, inflation staying sticky. We'll cover all of those outcomes. Obviously, we have a lot going on in the markets, a very different open than what we saw last week with the big gap down. So good to see that the market's kind of not as volatile this week. We have some data that we'll cover on the calendar for this week and how it's going to affect the market and how you should be positioning your portfolio if we get these rate cuts, which are seemingly going to happen in September, fully ingrained after this data is released. We have two more earnings to cover. Earnings are winding down, but we have Home Depot and Walmart. So we'll get a very good reading on the consumer and the economy, probably from these companies. And we'll talk about what those reports mean for the market this week. And then we have a story that broke last week between Google and Apple. And it might be a lose-lose for both companies. So you have to watch till then to find out what the story is and what's going on with those stocks. And then a figure we cover often on this channel, Elon Musk, is making news today. He's doing his first ever interview with Donald Trump after the market closes today. We'll talk about how that's going to affect the market as a whole, but then also Tesla stock itself. And last but not least, before we turn over to the model portfolio at the end, we're covering an old favorite, Meta stock. It's held up very well, pretty much the best out of all the mega caps tech stocks as the volatility began. So we'll cover maybe what the institutions are seeing and what investors are seeing on why they like Meta stocks so much. But I think we'll start off with Matt and George's topics, and yeah, we'll go from there.
So George, in the article for was it Fortune magazine that you were quoted in?
Yeah, you were talking about the syndication, but like, yeah, it was originally in Fortune, but it ended up in Yahoo Finance, MSN, and AOL. Apparently, it's still like my AOL. Like I see like the web traffic for the media hit, and I was like, wow, people still visit AOL apparently. So yeah, it got picked up.
That's old school AOL back in the day, but yeah. So I thought it was an interesting article. I read the whole thing. You were not as bearish as sort of the rest of the people that were quoted in the article. And we talked about three reasons why you were only slightly bearish. The first one is how 78.5% of S&P 500 companies are beating their quarterly estimates. Talk about that. How does that jive with what we're hearing about the economy and about a bearish market?
Well, I think generally when people are talking about the economy, they're talking about the macro economy, right? And I think that, obviously on that one, there's things like, inflation that's been around, but getting better. concern about jobs. Consumer credit is something that I think, especially when jobs started to show some issues, I think people are like starting to get much more worried about that kind of consumer credit side. So there's those macro concerns, but there's always how are companies doing despite the macro concerns, and the way companies are doing, as you said, very well. Not only are as you said, 79, if you round up, percent of companies beating on earnings, which is great. That's fantastic, right? Obviously. You also have 74% of tech companies beating. So it doesn't really, there's this kind of story that some people are pushing that say, AI is slowing down. And, when you see tech kind of posting such good earnings and beating, I don't think that really jives with that story. So I think if there was no kind of political or geopolitical concerns right now, I'd be very bullish, but slightly bearish, because I do think there are legitimate concerns around not only what could happen during this election, but also the way sides might play the market leading into the direction, and the volatility that could be expected from that. And we're already seeing that volatility. We're especially in QQQ net option sentiment. We're seeing a lot of nervousness in terms of what's going to happen with tech. And the numbers, as we're talking about, shouldn't the reporting company numbers shouldn't have a nervous market. So you're only really looking to outside forces when you say, like, what's making people nervous. So I think there's definitely that. And then there's these geopolitical issues as well. I mean, what's going on in the Middle East, especially with things potentially escalating, with Iran getting more involved. For however people are trying, that situation is just really staying there. It's not going away. And that's not only a military concern, but there's obviously, even within this country, a lot of push on different sides in terms of the tension that it's causing. So I think I don't need to say this to anyone. We're living in some very tense times, and tense times make investors nervous, institutional investors, retail investors. We talked about the story last week, how it was really retail investors that were selling off a lot last Monday, and institutions were more strongly in there. I think really because institutions were focusing more on the big picture, as they tend to in terms of the earnings. So yeah, it's an interesting time, but it's hard not to be worried about regardless of these events. What makes me concerned is the way the market keeps reacting and overreacting to a lot of events. That's what causes me pause and makes me concerned.
Yeah. Now you made a statement just a second ago I find pretty interesting. You said if it wasn't for the volatility and the political and geopolitical economic stuff, you'd be very bullish. And part of the reason that I know you'd be very bullish is because of AI. We saw some earnings, I believe it was last week, with Palantir, PLTR, that are very positive for this idea of the monetization of AI. So, man, talk to us about that. Why, apart from this volatility, would you be very bullish?
Well, yeah, I think especially when you look at AI, like Palantir is a great example of just like, we have kind of what's going on with chips. And I think that shows for a demand to build models, basically everyone looking to integrate AI into their business however they can. We've talked about AI that's like, I think building like pizza flavors or whatever, like crazy applications that we've talked about. But I think what's going on with chips reflects this ongoing demand to train models, especially, right? And that's just there. But then, you have an entirely different kind of demand with Palantir. That's people looking to solve problems, hire outside consultants, basically, to solve AI problems. So that's a different marker of AI really taking off. And I think we're seeing both. And, even looking at, Taiwan Semi released some numbers, and this is kind of exactly what we're talking about. Like, we would be bullish. This is the perfect example. We bought Taiwan Semi pre-market on Friday because it posted some great month-over-month numbers that was showing demand was, increasing. I think because they were just trying to make a point that business is good, and they went up pre-market and they shot down, as the market opened. And I think that's the perfect example of, something that we're talking about. whether it's just too much fear in the market, or whether, people that kind of go, or institutions that go long short, are seeing like, hey, like there's an opportunity to short Taiwan semi, even though their sales are, going up. So we can push down their price. Then when we think it's reached the bottom, we've shorted it enough, we can acquire it again. And, we're seeing that. We held Taiwan over, we held it over the weekend, even though we're not necessarily seeing the best day for the QQQ. I kind of am looking at an update. Yeah, I mean, it's up a little bit. Actually, it is a pretty good day. Taiwan semi's up above the QQQ. But yeah, it's like we're definitely seeing a highly volatile time and a very nervous market. And, that's why, we did very well last week. And after, we've been doing, we kind of had a bit of a slump, I would say 3 to 5 weeks ago, because we were not prepared for, especially the volatility. We would react to something and then it would swing the other way, and we were just kind of getting caught like zigging when the market was zagging. And so now, we're pursuing a much more stable strategy where we're taking, long short, we're clipping gains if we see, like, we're keeping a close eye on the signals. And if we see the signals change, we're quickly dropping things, especially if we have profit on them and we're looking for new opportunities, on a daily basis. And, some people, and we went back and forth, we always like to answer kind of questions that we get. And some people are just like, well, you should say how long you're going to hold things in an investing letter. And this is an investing letter. If you don't, like, for some of us that can't check a lot or whatever. And, what we always say to that is, if we're churning too much for some people, like, you can look at anything that we add on the long side, less true of the short, but especially if you're long only, we like anything that we add long on a longer time frame, and it's more comfortable for you to just hold. You could do that, but at the same time, especially Coinbase, which is, I think, was, what we've seen the best of. Like last week, I saw Coinbase at 100 when I got it, net option sentiment, and then down to 39, I dropped it, and it was back up to 98, and I picked it up again. And that's just a situation where it's just like, if that's too volatile for some people, we understand. Like, but we can't teach everyone everything. To a certain extent, like, we know Coinbase is volatile. Like, and that's, if you have to learn that lesson, hopefully you only have to learn it once, that you might have to turn that around quickly, or you might have to just say, hey, I'm taking a longer hold on it. But the problem is that, sometimes that longer hold, especially something with Coinbase, could involve like a 20 to 30% loss before it turns around. And we don't really take those kind of losses. Like, if we have an opportunity to get out at like a 5% loss, even if the signals are looking pretty good, if we just see price going, like, we tend to get out. Like, unless the only time we don't get out if we see price starting to go against us is if we actually see, like, say, net option sentiment lowering as price goes up, because that means that the wind is going out of the sails. But if we see price, price net option sentiment lowering as price goes down, typically what we'll see is it goes up as it goes lower, because people are starting to take options positions or change their options positions. So we're pretty sensitive to that, but it's always really important to make sure that you're pursuing a strategy that works for you. And we always kind of put this in, our more advanced tactics, is we say, like, look, you in this market, on yesterday, we recommended, especially if you're tech heavy, an 8% SQQQ hedge. And then you can just buy whatever tech you want. You can expose, on the upside, you've got some downside protection, and then you can just hold. You could hold for losses in Coinbase. You can hold for losses in XYZ. But we don't think that's the optimal strategy. We think the optimal strategy is, a tightly managed long short portfolio right now, where if it looks like it's reached its bottom, if it looks like the signals, especially net option sentiment, are changing, we're moving through. That's the process we'd recommend if you have time. But, different processes work for everyone. But it's, working well for us. Like, over the last 2 weeks, without having any just like huge gains, like any standout ones, we've just been clipping things. We're up about, 15% annualized. And if you go from our bottom, we were about, like, we actually, as we were adding Coinbase, as crypto was going down, we were, kind of playing the Trump event. We actually saw our returns go as low as 35. So above on an annualized basis. So we're 30 plus from where we were on the bottom a few weeks ago, or like 3 weeks ago, I'd say. But, that just kind of tells you what we always tell everybody, like, that strategy where we loaded up on Coinbase and CleanSpark, that might not have been for everyone, but it was our strategy and we had conviction and we stuck with it. But, that by no means is something that we think everybody's got the stomach for or the risk tolerance.
One more thing, George, and I'll shut up. But one of the things I love about Prospero, and one of the reasons that I started reading the letter to begin with, is I wasn't looking for somebody to tell me what to buy. I was looking for somebody to teach me how to trade. And I know, George, that's your heart, is that we don't want to just hand pick things for folks, but we want to give folks ideas about what we think is good in any given moment, and then teach folks to look at the numbers for themselves. George, I was telling you about a buddy of mine that I was teaching the app to over this last week, because he was following your picks, and he called me and he said, man, I can't keep up with all the picks, what I do. And I said, man, George doesn't want you to follow every pick. He wants to give you ideas, and he wants to teach you how to read the QQQ net option sentiment, the SPY net option sentiment, see the direction of the market, and then make decisions on your own. So talk to the fairly new Prospero user about how to use the numbers with your picks to make good decisions.
Yeah, I think that's like, I think the one thing that I tell everybody, and I think, for people that watch these streams often, it's that we promise that anyone that gets to know the Prospero signals will get better, right? We're not like other AI companies promising magic, but if you get to know the signals, I've never had one person that I've promised that to come back to me and say that I was wrong about that. And that's one of the things. I think it's a good promise. I think it's like, I think it has a lot of confidence in our products, while also understanding that, some people, you got to put in the work. You got to get to know like any signal. It's not magic. You can't just look at it once and say like, oh, it's this. Like, signals move. The market moves. But yeah, that's kind of the important part, because if we don't teach people how to use the signals, and by the way, I can do this so well because I built these signals to help me and I know them. And like, I was talking to a potential investor last night, and I was basically saying, there's kind of a relationship between the signals and a stock, that if you get to know it, like Tesla's behavior with net option sentiment is very different than say Meta. Tesla, like if I see a few readings at 90, if it's been, it could be very volatile, I'm not that excited. Like Meta, I expect it to be above 90. If I see it hit 80 or 70, that's a sell signal. Tesla, it could, in a given day, it could do, crazy things. It could shoot down to 40 and then back up to 90 and everything. So, I think that that's a very important part of it. Whereas it's like there's a relationship, like anything, where you look at any data on a stock and there's a relationship between a stock and the market and the sector and all those things that you really just need to get to know if you're going to do it well. So
yeah,
I
like
think that
ASTS, which is my favorite stock in the world, when it goes over 72, I noticed that. When it goes over 72, it's typically bullish for the day. But that's something that I just learned by studying it every day. And that's what you make. Each stock has a different relationship to the market. 72 for Meta is going to be horrible, but 72 for ASTS is a home run.
And what you're talking about is like, we build these to track institutions, right? So basically what you're seeing is like, if it, like, institutions are swinging that both ways, and you can see it. It's pretty wild. I've been watching it not as long as you, but it does swing. Sometimes in the same day, it can go down 5%, then back up 5%, and then, back down. And so with that much, like, kind of swinging activity, like, yeah, you really want to see, you can get a feel for when there's a critical mass of institutions that are bullish in the options markets that are going to ensure that the price is going up and that their options are not, like flooding down in value. So yeah, it's that in action. And at the end of the day, knowing the signals is is best because like I do these live streams, you know, a couple times a week. I write a few letters, but there's a lot of time in between then. And, you know, at the end of the day, learning the signals and seeing what they tell you is going to be better than the last thing I told you if it was 2 days ago, you know, or even like a day ago or later in the day. These things can change, especially if you look at like QQQ net option sentiment. Like I've been very sensitive to that. There's been times when I've been liking the price action on tech stocks the last few weeks, and QQQ net option sentiment has just been too volatile. Or it's been low, and I just be like, look, you know, as the price action looks fine, I like what this stock is happening, but I got to respect what's going on with the index level option sentiment. And, you know, until you kind of know how to read, you know, the single stock, the associated index, you know, sometimes even, you know, we don't have every ETF, but we do have things like SMH and XLK, like things like that in there. And sometimes it's helpful to read those sector-based ones as well and get to know those. Like the more you have a map of that, the better off, you know, the better off you're going to be. And also, you know, when I'm looking at something like SMCI, like a big thing for me too, and I've been doing this with like deciding on Taiwan Semi and SNPS, because that's what we've been playing in kind of tech lately. You know, I'm looking at NVIDIA and SMCI and SNPS and Taiwan, and I'm like comparing them. I'm looking at their graphs and I'm saying, you know, okay, these are the choices of what I would play in tech. Just, you know, what looks the best among them? Are they behaving the same way in terms of, you know, their option sentiment numbers, especially? You know, that's super important, because if I see others going down, and a big thing that like clinched it for, you know, Taiwan Semi me going in is like, I actually saw the social sentiment wasn't as high on the other chips companies, and it was higher on that one. And, you know, the option sentiment had stayed a little more stable than the other one. So that's what ultimately made that decision. And Taiwan Semi is not something that I typically play relative to the other ones, but it just looked better. And it looked better when the other ones were looking more iffy in terms of their numbers. And just like learning to do those kind of checks yourself is going to make it way better than just even listening to me or looking at my picks periodically.
Yeah. But having said that, and Steven, I'm out, but just want to say to all the folks listening, man, read the newsletter on Sunday night, because we really do two things. We talk about the previous week, and we talk about mainly where George and the team feels like the direction of the market is going, and he is right more times than he is wrong. And so if you're not reading the newsletter, be sure and do that. So, man, appreciate you guys having me in. Y'all have a great week, and hopefully we'll see you next Monday.
Thanks for coming, Matt.
Thank you, Matt. And I'm going to toss a question I see in our chat up to George, but then I'll be sharing the newsletter on YouTube and Twitter. So if you are not signed up, you can sign up through the link that I'll be about to share in the comments. But George, so I see a question from Jonathan. Can you tell us what you saw in the signals that made you want to add ASTS last month before it went on a massive gain?
Let's see. Let's see when I added it, because I'm looking at the time series on net option sentiment, and I'm looking at like a pretty clear answer right there, but I want to get a date. Let's see. I added ASTS the 25th. So that's a little outside. But even if you look at the graph, right, I added two positions. One of them was the 25th. But oh no, I think maybe one of them was later. Oh no, I had one the 23rd and one the 25th. Anyway, if you look at the graph, right, you're seeing net option sentiment like it started at 68. And I think that's when it actually went down, but I think it was higher. But basically, you know, we're seeing not only a you know, kind of really nice upswing in net option sentiment. And that's when I added it. I basically saw it going up in net option sentiment. And generally for like a mid cap stock, 70 or even 80 is where I think I saw it, is a very, very good number. Now, today, I would be a little more hesitant to add it versus hold, where I have a massive gain and I'm just kind of like seeing and still deciding if I want to hold for earnings. because I think earnings could be really good for it. Like, I think there's a reason everybody's like this excited about it. But like now, like some people are asking me if they add it, and like I'm seeing 92 short pressure, 90 dark pool. So even though net option sentiment is in a nice upward swing, I'm not sure if I would add it today versus holding. But yeah, it's generally driven by net option sentiment. Also, we have like a 0 downside breakout. So that is a very nice number there in terms of the long-term risk on the stock. But yeah, and actually something that's important to say about downside breakout or an upside breakout is like I've actually heard this a few times. It's a 1-year signal, right? So basically ASTS is pretty volatile. So I could easily see it going down 20, 30% or whatever. But basically what it's saying, like when it's seeing that kind of assurance, is that the overall growth trajectory of the stock and basically where institutions are betting, they see it might get hit, but they're holding long-term options or not holding long-term puts ultimately. So yeah, I think that, that's a pretty important, distinction, but yeah, I mean, honestly, I think I just saw it going up into zones that are very, very good for upside breakout and net option sentiment for a smaller cap stock. And it became kind of an obvious target.
Okay, so we have a lot of data that's going to be released on the market this week or on the economy. PPI, which is the producer price index, is Tuesday. CPI, which is the consumer price index, is Wednesday. And then we have retail sales data Thursday. So prior to the last, several weeks or month or so, we had been in an environment where bad news was good news for the market. It seems like it's switching now where bad news is going to be bad news. Maybe people don't understand that language, and you could explain like what that means when people say bad news is good news and so on. And also if you think that that's still true, where bad news is bad news or is bad news good news, and how is this data going to affect the market throughout the week?
Well, I think that I think there's two different things. I think right now there's not a great number for jobs. And I mean, I think jobs being very disappointing was the problem, but I think people are starting to get worried about especially consumer spending. So a jobs number that's too low, I think is going to get people worried about spending, about the macroeconomy around that. So I think that's what we're seeing on jobs, because a good jobs number, typically a good jobs number got people worried that cuts were going to take longer. So that's how we kind of got into that situation. And I think they still might be worried, or they still might be worried. I think the market's now really pricing in 2 cuts. They might be worried that good jobs numbers only gets us 1 cut. So I think jobs is one thing. But I think, in terms of, inflation, good numbers there are still going to be, good news. And bad numbers are going to be bad news. Like that's been, obviously pretty aligned. That's been the straightforward one. But one other thing that I would say, if PPI is very good, and jobs are also where they should be, maybe they even look a little better, I do think that could ultimately be good overall, because inflation getting under control is going to be compelling enough, even if jobs are still looking pretty strong, I think, to stay on the same kind of cut schedule that we otherwise would be. Because basically when Powell talked last time, he's basically said he hasn't been disappointed in a number since January. So I think he's definitely saying that we're on the right track. So I do think that's where we're at on that front.
So pulling on that thread a little bit further, it seems like September rate cuts, whether it's, 0.25% or 0.5%, almost certainly going to be some rate cut in September. How can investors best position their portfolios for that upcoming event? And what sectors typically does that benefit more than others?
I mean, what we've seen is definitely smaller cap stocks. Like as rate cuts are becoming more sure, that's when we started to see that, kind of rotation. So I definitely think a cut, or, the closest, especially if it's like a 0.5, I think that's going to be very, very good for small caps. And then obviously, to your point, real estate finance companies. I'd say especially like if there's a sweet spot, I would say small cap, like consumer finance companies. So anything like loaning anything, like Root was something that we were looking at because we thought that was going to go boom, but the rotation didn't fully materialize. So yeah, I think that those are the main things, but small caps in general, I think even small cap tech should do very well if there's a big cut. But tech in general, like I just think, like we're talking about, I do think AI continues to show strong numbers. And unless, the political situation kind of rears its ugly head again, I think that we're going to see that really benefit tech as well.
So we've had almost all of our big companies report earnings already, but we have two more big ones this week, just adding on to the data that we already talked about that the market's going to be weighing. We have Home Depot pre-market Tuesday, and then we have Walmart pre-market Thursday. I'm doubtful that they could, shock the market with anything in the reports. There's a lot of companies that seemingly have already noticed consumer weakness and talked about it. So maybe the market's a bit already factored that in. But how do you expect these companies' reports to go? And do you agree with me that no matter what they say, it's not going to be a shocker?
I think Tuesday and Wednesday with PPI and jobs are really going to set the stage for, how everybody reacts to it. I think if the jobs numbers are good, people are going to care a lot less about even if, Walmart disappoints, because, Walmart has a lot more competition than it did before. And so like them posting disappointing numbers doesn't necessarily mean there's consumer spending. I mean, I think Amazon was much like, Amazon, they're getting more competition from Temu. So there's that. But I think people look to Amazon much more than, Walmart used to be much more of like, I would say, an indication of the economy overall. Now, Home Depot is about construction, right? So I think that's a proxy for the real estate market. And I think that could be, if we're seeing weak job numbers, even maybe inflation coming in at estimates, and Home Depot disappoints, I could see that carrying down the whole real estate market a bit. So I think that's the one to probably be more concerned about than Walmart in terms of how it could, have its ripple effects. But what I would say is that if inflation and the economic like numbers come in well, I think good, bad earnings, whatever, will be pretty isolated to just those companies.
So we've talked about inflation so much on the stream because it was such an important, factor in the market over the past year. Maybe soon it won't be as big of one with it coming down. But Cathie Wood is someone who's been standing on an island by herself. She's the only one who's been screaming that the Fed has kept rates too high even a while ago because we're going to get deflation, she thinks, versus just, inflation slowing and coming down to a reasonable level. Do you think that could possibly happen over the coming months? There's been a lot of companies, McDonald's, we've covered how they've offered a $5 value meal. A lot of companies are pivoting, saying they don't have the pricing power that they did just last year. If we did see deflation, how do you think it would affect the market? And do you think there's even a chance, is Cathie Wood possibly right to call this?
No, I think part of it, like maybe she could be right. If I don't think inflation was as much of a macro issue. And we talk about all the time how it was like 51% due to like corporate profits, which is much larger than normal. So like I think the perfect example is I think it was that like even in a better rate environment, like where inflation isn't happening as much, Chipotle keeps raising its prices, right? And they were doing that, and I think they just have realized that they can get away with it. So I think like some of these price increases are not necessarily due to an overall inflationary economy. I think some of it is just due to these companies being opportunistic and realizing that they can raise prices. So as long as there's behavior like that, I don't think we have much risk of deflation. And the larger thing is, behavior like that, whatever. I think what I'm saying, irrespective of the fact that companies are being opportunistic for that, is that I do think there is, you know, not that downward pressure that you would need for a deflationary environment. Whereas, like, oh, if we don't lower our prices, people are not going to buy our goods. I don't think we're really seeing those kinds of behaviors out of consumers. Now, consumer credit keeps going up. So perhaps what she could be counting on is kind of like a bubble where consumer credit, starts to dry up. But we're just not. I'm always of the belief, not don't predict things that you aren't seeing the data for, right? So we do see consumer credit continue to go up, up, up. We have seen some delinquencies go up, but we're not really seeing it, we're not really seeing that strain result in, heavy defaults or the kind of behaviors that you start to see when you're worried about a credit system breaking down, defaults leading to losses, leading to tighter credit practices, right? We haven't really seen that yet. So it's possible, like, much like I said in the article, like, it's possible that Cathie Wood is right. And we do see that, credit protection at some point. But I don't, like, it's one of those things, like, we saw it during the mortgage crisis. Like, America doesn't necessarily let credit markets blow up anymore. Like, because for credit markets to blow up, it would mean banks, have to suffer, and they don't really let banks suffer, or they don't really let banks fold. So, I think we can believe, just like we've seen, if this credit stuff does come to a head, we can almost expect the government to step in. And I think that's why Americans have this kind of relationship with credit. And, they see the country getting in bigger and bigger debt. They, have their debt. And I think, especially when people look around and see that, I think people are perfectly comfortable with the idea that perhaps bailouts come when the market gets strained enough. You definitely don't see Americans concerned with taking on more and more credit. No matter how many times we've kind of been burned by that situation as a country, or people have been burned, it doesn't, it seems to start up again.
And so the market doesn't like high inflation, and it probably wouldn't like deflation, but it seems like the biggest risk would be stagflation. If we see weak inflation data this week, can we finally fully write off that outcome from being a possibility? And maybe that's why the Fed can cut rates now, because stagflation is no longer a concern. Do you think these readings this week are the nail in the coffin on stagflation theory?
I mean, I don't think it was ever really. I don't think it was a very good theory to begin with. But yeah, I think we're getting close to that 2%, closer and closer to that 2% level that the Fed wants us to be at, and it's just like, I don't think we're seeing like enough signs of the economy. Sure, there's jobs, right? But we talk about like perhaps a structural unemployment problem, but there's jobs. But then you see like GDP last quarter, beating estimates. And if you're talking about like concern for the economy, like, yeah, we might be seeing job problems, but we're not just necessarily seeing production problems. And until we see production problems, and I think inflation would have to be, kind of higher with those production problems, I don't see it.
So you've said for some time about how some of these big mega cap tech companies are monopolies in their own rights, and Google and Apple, their relationship just got shaken up last week. So last Monday, U.S. District Court Judge Amit Mehta ruled that Google has illegally monopolized this online search market, which we kind of talk about Google and NVIDIA in the same light, how their dominance and reliance on one product is kind of a downfall of their thing, because if they lose market share, it's going to be very bad for their respective stocks. So this story for Google, not a good sign. and they're facing competition from OpenAI and many others with the new search engines that are AI driven. But then also, it might be a lose-lose for Apple as well, because Google was paying Apple $20 billion per year to be the default search engine for them. So Apple could be losing billions of dollars. Google could be losing the outright, right to be the default search engine, and then the competition pressures that is weighing on their stock. So, what do you think about, from Google's perspective, Apple's perspective, and then also, is this a sign that we could see some of these companies be broken up, Google and others, in the future?
I mean, one of the things that I've specifically said about Google is like they're the biggest monopoly that I've seen for like the longest, and they're a pretty classic monopoly. Like even if you look at something like Amazon, that's probably like the next biggest monopoly that I would see. They're not as much of a classic monopoly because there's other places that you can buy a lot of the goods, right? It's not really competitive, but there's other places that you can buy them. Google, like up until recently, and I mean, I would say most people still use Google search engine. But there's a real competitor finally. But Google has had like just like a classic textbook monopoly for a long time. I don't think like a lot of companies, like as I mentioned, are big enough monopolies right now that they could be broken up if the FTC wanted to. But they don't want to. Like the political situation that we're in, these companies, the people that run them wield so much power that I don't think that they're really serious. Like, if anything, like I could see Microsoft, that's always very close with the government. I could see this being a Microsoft driven lobbying situation to actually like act like, because like, hey, the skeptic in me says nobody really cared about this monopoly for many, many years until all of a sudden Microsoft is launching a search engine. And then all of a sudden, when the monopoly's potentially at its weakest, that's when the legislation comes through. That to me adds up to, Microsoft at least having a hand in this. And, Microsoft has a lot of like government contracts, a lot of power within the government. So yeah, that would not surprise me.
It's interesting that you brought Microsoft up, because in the podcast that I was watching where I saw this story brought up, which is the All In podcast, which I'd actually recommend to our viewers. It's very good on the markets and entrepreneurship and all areas of business. Once you're done watching the Prospero.Ai Stock Market Live, you can go tune into that one. But they brought up Microsoft as a case study for what could happen to Google, because Microsoft is like one of the most innovating companies now, and the stock is doing so well. But they had kind of like a dead decade where they were kind of in like the state of like what you'd think of maybe as IBM now, or one of those other legacy tech companies. But Microsoft was ultimately able to recover. Do you think that's a possible scenario that Google could be getting into, where they're going to face such regulatory pressure that they're not going to be able to innovate and kind of just hover along until the time can pass and they can, again, be one of the leaders? Or how do you think, on a longer time scale, 5-10 years, it could go?
Yeah, I think the big thing about I think the big thing about Google is like, yeah, sure, like they might lose some ground on the search engine, but I think their brand is so strong that like even if OpenAI had a better search engine, which is like something that remains to be seen, I don't really know how long it would take for them to gain market share. And then you got to really think that like Google, we always talk about this, has the best like pure AI brain. So like in a world where AI becomes more popular, like it's not the same as IBM. Like IBM was early to market, but they were never necessarily like the best technologists or project people. I mean, I would say more product people. Like if you think about Watson, right? Watson was really like the first AI that like, that kind of had the groundwork that if they worked on it right, if they had a good research team, could have turned that into something. And they tried. I remember talking to the Watson people and they were charging way too much for it and it wasn't that good of a product. But yeah, I think Google is, in terms of their ability to create cutting edge tech as a research organization, like I think is definitely stronger than a place like IBM that was really kind of like coasting for a long time off of just being like early to market on an idea. But Google's also not the best at productizing things. But I do think just the fact that they have stronger technology, stronger ability to research, that does put them in a kind of a different category than IBM, especially in a world where AI becomes more and more important. So I don't think they should be counted out yet. But even if you look at what's happening, like with Gemini versus Claude and Chat GPT. Like, I know people that love Claude. I know people that love Chat GPT. I don't know many people that talk about Gemini, even as they keep on iterating on it. So I do think that's the other side. I do think that's a potentially like concerning sign about their ability to like productize something that has like the better brain. They invented the transformer model, which is what powers, Chat GPT. So I do think looking at it that way, there's kind of hopes and concerns, but I wouldn't put them, they're going to have to really mess up to be looked at like IBM in my book.
And maybe the market is kind of already pricing in all of these factors we're talking about, because if I'm not mistaken, I think Google is the cheapest based on PE and forward PE of the mega cap tech. Maybe, no, I think, or maybe Meta might be slightly lower, but they're both kind of the more value of the bunch. So maybe that's why Google's PE is like that. Spinning to another company, a popular figure on his channel. Big event happening today after the market. Elon Musk is interviewing Donald Trump on Twitter or X today. I'm wondering if this is going to, if it has the possibility to be a broader market mover, if they discuss some of policy and stuff like that, and then more individualized for Tesla stock, if they cover any of that stuff. Obviously, you've mentioned how Elon Musk is kind of going all in on a Trump presidency, aligning very closely. So what are you thinking about that event we have coming, I believe, 5 o'clock today?
Well, I already bought Tesla when we were talking about this. It's been down a little bit, but I have a hard time seeing that conversation not going well for Tesla stock. But I think I'll probably also clear out of my like chip position. I also have a hard time seeing him not have like be asked about what he said about chips and things like that, and that not potentially being a bad event for chip stocks. So I think that he definitely is. I think I just saw that he officially endorsed Trump for president, which is like surprise, surprise. But yeah, there's no way there's not something positive that comes out in that conversation for Tesla. And I also just like based on his behavior already, Trump's behavior, I just am like worried for tech and the market overall. Like I don't think I like we've talked about this strategically how he views the market and how it like a good market is good for an administration and a bad market is like a bad reflection. I just have like a really hard time seeing him not say additional things that he knows could send the market down. So yeah, I'm going to be cognizant of that for sure.
And when we've covered the story of Tesla and Elon Musk kind of aligning with Trump so far, we've kind of talked about the angle of like if Trump wins and how it will be good for Tesla based on that. But is there a lot of, downside that could occur if Trump loses and then Tesla and Elon Musk have aligned themselves and the market's pricing that in? Is there a risk on the other side that I would like to bring up? We haven't really talked about the other side of it. That could possibly be brewing right now.
Yeah, I mean, I kind of think like the Democrats tend to be very friendly to the markets too, and especially like Kamala has like a lot of friends in tech. But so I think it's like pretty overblown. Like I could actually see just because like Trump has done so much, like I think the market is just like the way he aligns with the markets and like especially the crypto markets is like very different than I would say in terms of like how much he prioritizes it and verbalizes that to a point where like, yeah, any president next to him is, I think, going to do less to prop up the markets and make sure they're good. So I think there's that, but like I don't think the next Democratic administration or like really any administration that I've seen is not friendly to the markets. So it might be a little hit, but like I definitely think um especially as like I mean that's why companies um that's why companies or CEOs don't tend to align politically because like with how aligned politically like Elon has been with Trump, like I have a hard time not seeing like a Democratic administration, doing things that would hit him back. Like, and it's just politics. Like, and it's why a lot of like CEOs stay out of the fray in politics, I would say, because if someone's if someone's like supporting your opponent and doing things to help them get elected, like you don't want you don't want that person to be more powerful. You want to do things to affect their power base so they can less effectively support the next candidate that they might end up supporting. So it is like you definitely see CEOs, even some companies or whatever, like aligning in dollars with politicians for sure. But I've never really seen uh, a CEO that's this high profile, like align themselves with a presidential candidate so strongly. Um, so yeah, I think it's a binary event for Elon, which is why longer term I just get very uncomfortable, like especially holding Tesla. But I'm definitely going to be playing this event today now.
Yeah, so all eyes will turn to that after the market. It is that time in the stream. We have one more topic to cover before we turn over to the model portfolio update. We've had just about 750 people in the stream between X and YouTube. So thank you everybody for tuning in. We love to see everybody in here. Comment any questions, concerns, anything you want to know about the stock market right now in our chat if we haven't covered it already today. Like the stream if what we've covered so far you enjoy. But without further ado, while you guys are typing it away, we'll cover our last topic and see if we get any questions. So obviously, the last week and a half or so, there's been a lot of volatility in the market. A lot of stocks got hit. I thought it was interesting that one of the Prospero old-time favorites, Meta, held up so well versus the competitors or, the mega cap Magnificent Seven. Could we see it being the leader out of that bunch again based off the fact of how it's held up and how it's performed in the last week?
Yeah, I mean, it's one of those interesting kind of circular logic things where eventually, and we got into it, pretty strongly when we did over a year ago now, where, there was overwhelming institutional bets, especially in the long-term markets on it. And those have stayed in both the long and short-term market. So, there's one of those things where it's just like, yeah, if the bets are that aggressive, it means that they're confident and there's something that's making them confident. And then if you go, and we've talked about this, if you look at the business, right, they're pretty much always the third best growth company in the Magnificent Seven. They're still only at a 26 PE, which is, fantastic for a company that can grow like that, right? They have some great plays in, open source AI, in the metaverse. Wall Street seems to be pretty generally happy with how they've started to monetize AI. So I think that, yeah, it's one of those things where you see the strength in the Prospero signals and you're like, okay, like I'd be confident in this just for that reason. But if you actually dig in and see why, it just makes a lot of sense. And yeah, like we talked about this a bit. There was 100 net option sentiment and 100 upside going into their earnings. And, even though I, because of my risk control practices, didn't play it, there was a lot saying I should. And, they were even showing that they had a stronger business than Google, a stronger business than Microsoft in terms of, beating in all of the areas. Whereas, Microsoft people were nervous on cloud. YouTube, they weren't nervous on cloud, but they were nervous on, Google, they were nervous on YouTube ad revenues, right? So you're seeing Meta, which is just a much more well-rounded, overall business that has a lot of these units, but all their units on the whole, their forecasts, everything were things that Wall Street were betting on going into it, liked when they said it. So yeah, you're looking at a very stable growth company. That I don't. When is their dividend scheduled? I didn't see that part, but their growth is stable, their R&D is good, and they're a dividend company now too. So what's not to like?
And the one like downside of Metastock that we kind of talked about a couple months ago was how they've faced some bad press, specifically around elections in the past, and what they've done with their content. It seems like recently they've gotten none of those stories, articles come out. Been kind of low key. I don't know if you've noticed, but I've definitely noticed Mark Zuckerberg has been. I don't know if he hired a PR team, but his social media and his presence online seems to have really shifted. So maybe he's trying to like become more neutral. But do you think we could see that heat up with the election, or do you think they're kind of making it like that is their priority right now to stay out of headlines? Like I forget the term you've always called it, headline risk, I believe, maybe
Yeah,
that companies
risk.
face.
Yeah.
Yeah.
I mean, it's one of those things that is going to be hard because, like, for example, like Trump doesn't like them, from the last election, and he's not someone to give up grudges quickly. So unless they like pander to him during this election, which I don't expect them to, um, I think there's going to be some backlash, and I might not even hold into the election for that reason. But who knows? Like with the way people are betting on it, if those numbers are staying strong, maybe these institutions know things that we don't. And you never know what's going on behind the scenes. Meta has like an ethics board. They have like it's quite possible that what they've been doing is making sure that they have people on like both sides of the aisle that feel like they're getting input into the policies. That I think headlines don't just go away, right? A lot of headlines and a lot of media, they're like, unfortunately now the arms of political parties. So I think, you can kind of Occam's razor it. Like if these stories aren't around anymore, it's probably because Meta has instituted policies that, both sides are feeling more heard about. I think that like if that wasn't the case, we'd be hearing about it more. And I know Meta has done a lot kind of in their governance to make sure they're hearing like a much more diverse set of opinions.
And it sounds like if there's any kind of weakness around the election time, as long as the signals look good, it'll be a buy the dip, not a sell on an event. So, but I
Yeah,
don't
we'll
see any
see. I don't think
question.
there's going to be a whole lot that I want to hold like into the actual election and after. Like, there's only a few things you can count on both parties doing. I mean, Wall Street, like, holding finance stocks, Wall Street is always a good bet, like to be pandered to by both parties. Defense stocks are always a good. I think I'll probably like lean more on those kinds of things, but we'll also see what the numbers are saying.
Yeah, and that's going to be an interesting week of live streams. I can't wait for that. Sure to be a lot to be talked about then.
Well, I mean, honestly, like what I read about the way that's shaping up, like Pennsylvania just came out and said they weren't going to be able to announce on election night, which is just like I think we're heading for, like chaos. What's the other? I think there's another state. It was I don't know if it was Virginia, another state that said they were going to have to count every ballot by hand. Um, so I hope maybe we can get back to sanity around elections at some point, and maybe even willing to do I don't know do something crazy like being willing to use computers, like because computers are actually more secure if you do the security right. I guess they're just easier to like question. Um, but yeah, like I don't know. Like I think no matter what side of the aisle that you're on, elections have just gotten like way more stressful, way more crazy, intense. So hopefully we can end that practice again at some point, and we can find a way where everybody could start trusting our elections again.
I think on that note, beautiful point to end off this segment of our live stream. We'll do a switch over. All right, we'll see George on the other side in the Prospero.Ai laboratory. The stream will be stuck with me for now. I see a comment, Mario, ChatGPT for president. You know, it's a joke for now, but who knows? In 2050, 100 years, I don't know. The world's changing so quickly with tech. Who knows what's going to happen? Let's get a live look at the markets before we do the model portfolio update. It looks like the QQQ is the strongest of the day. Wow, it's swinging back and forth though throughout the day, but it is up just over 0.5% right now. The SPY is up 1/3. Dow is slightly negative, but almost flat. And the IWM, the small cap stocks, just consistently underperformed, down 0.85%. So, wow, it's crazy to see day after day when we do these live streams that the Russell is just always underperforming. But let's take a look at the QQQ and SPY net option sentiment to see how things are going today. So the QQQ, which I believe George and Matt mentioned earlier, had been at 40. Looks like that pop has dropped a bit. It's at 23, but still up from levels that we've seen recently. You know, it was at 0 just last week. So kind of in no man's land right now. That's why I think it's very tough to know what's the market's next move going to be. But then we see the SPY. The SPY is well higher at 50. And there was a clear recovery in the SPY starting August 6th. So last Tuesday. And it's maintained its levels in the high 40s and hovering just around 50. So very interesting to see the dynamics between the SPY and the QQQ. Is something I always like watching when we do the streams and throughout the weeks. The difference in the levels we see in those markets and where institutions are betting. It seems like the SPY is a much better place to be right now, seemingly, from the institutions. But we'll see how things shake out.
Okay, here we go. We're gonna have a new way of doing this today. I gotta present, but let me get everything set up first.
Interesting market today, George. The QQQ, after opening up, popping negative, rising up again, going negative again, back in the green. So it's swinging all around today. The market doesn't want to make its mind up. See how it closes though.
The volatility continues. Let's see. What do I need to do here? I need to pull. Okay. We have our new net option sentiment movers.
What is that? The biggest change in net option sentiment?
Mm-hmm.
Interesting.
All right. So, no, that's not the one. All right, I can start sharing. Yeah, so you'll see what I'm going to do. So I have this, and I'm basically, why does that always happen? I'm basically looking at what the biggest I'm looking at the difference between I'm looking at the difference between like the moving average today and then the 7-day moving average, and then the 7-day and the 28. So I'm basically seeing what kind of momentum it has.
Kind of what we do when we look at the trend of the net option sentiment chart.
Yeah.
But
Except this is like smoothing out the edges of that, you know?
Mm-hmm.
All right. And then I'm going to actually look at technical flow today too. So it's going to be a cool little review. And then we're not going to do sector stuff or anything. We're just going to do pure movers. All right. So we got this. This is like the 7-day moving average. And then got a longer one. And then I'm actually going to multiply this by I want the shorter term one to matter more. So I'm just weighing it differently. Then we want to do a few things. We want sometimes takes a second to refresh. Okay. Come on. We can do this in the meantime. All right, are you ready yet? Sometimes this can be very, very slow. We're doing it the old-fashioned way. And this is just making sure we're getting certain momentum. Okay. So now we're going to isolate the bull picks. So what we want to do for that is largest, and then you basically, spot, look at that, that's funny. but not good check flow. So then we want to do this greater than 60 and this. Greater than. Okay, and now we have, let's see what it looks like here. We have our little paste thing. Okay. So we want 18. We don't necessarily want chips exposure. All right, and let's just make sure this matches. Yeah. We're already in Eli Lilly. Oh, FSLR is an interesting thing. But we got 80 and 92. Let's check out FSLR. I think it might be time to add it.
So this is showing the best trending net option sentiment, the best net option sentiment trends in all of Prospero.
Yeah, I'm adding FSLR right now. And then I'm also like combining some other information.
Mm-hmm.
I mean, FSLR looks really good. That's why I'm adding it right now. All right. Yeah, we can like this is like great momentum, especially with you're seeing with the technicals too. So that's we added a little URI. FSLR is still a little low on net option sentiment, but I guess it's I didn't realize that, but it's increasing. All right. I don't think we want to do anything else on the long side, at least not here. But PDD like continues to go up, so that's a good sign. On the trading letter, we might do different, but we do need some new bear picks. So for the bear, we're just going to kind of flip this, right? We're going to do less than 40. And we're going to do less than 40. And then we want the smallest. Ooh. Let's check. We just dropped ALB. Oh, damn. Did it report? Looks like we shouldn't have dropped it. What happened? Damn, that was a missed opportunity. We're not going to grab it now, though.
And I'm trying to find some info on it.
All right, we're definitely going to... When we do the trading letter, we're doing the investing letter first. Definitely looks like some good opportunities here, but I'm not sure. Light fuse. That looks like another good one. Yeah, light fuse looks like a great opportunity. I'm shorting light fuse now. Okay. Yeah, a lot of these look great. Damn. These look great. Oh, we almost shorted this today. God damn it. I like that. Yeah, okay. A lot of these look good. All right. So what I'm gonna do now.
Our stream viewers watched it live, but this is a special edition where we share our movers table of the stocks that we like bull and bear with their best either positive or negative momentum. Already added a long and short pick from this list, and we will add more in our trading letter.
Okay. So now, where did that go? Oh, it's here. Okay, so all of these ones. Oh, we don't need that because we added it elsewhere.
We got a comment from Jonathan about FSLR and how net option sentiment looks volatile. I think
It
he's
is
wondering.
volatile, but that's the nice thing about looking at the moving average, because yeah, the moving average is going up. It's been volatile, but since we're checking out the moving average, that gave me a little more confidence. We can do this. What's cost? Cost has been looking good. ENPH too. Same thing. We can grab that. Domino's has been no, I don't like that trend. Oh, that looks good. There's not enough confidence. Okay, so we're going to do this. We're going to Which one was banned? Was that? I'm going to keep my eye on banned. Okay. Now. All right, let's see if we got anything that we want to get out of. Can you show us anything here? There we go. Ooh. I have some other solar exposure. I think I feel good about this. All right. So I think there's that. And then I want to take a closer look at, I think it was like site. I don't quite love that. And banned. I'm going to keep my eye on those. What about all? This looks good. All right, I got to keep my eye on those a little more. But now I have like a watch list for the day. It's nice. All right. Getting out of here. All right, I think we're done here.
All right, interesting action we are seeing in the day. That was cool to watch too, to see that the thing you did with the net option sentiment. Are you gonna do that like every time from now on, or?
Yeah. I mean, it might only get more interesting from here.
Yeah, we'll see how it affects the picks, but we'll be back Wednesday at 3 p.m. So everybody tune back in then, and we'll cover what's going on in the market. But thanks for tuning in, and we'll see everybody there. Have a nice day, everyone.